The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And it is a gorgeous and not too hot Friday, June 6th, at the world headquarters of financial trading, TFNN.com, also the headquarters for technical trading and investing, TFNN.com. It is World Kiss Day. It's a day that everybody set up, or a lot of people decided to set up, let me put it that way, that is less commercial than Valentine's Day. And just to have a nice little smooch. Remember what it's like without all the fanfare and cards and everything else. World Kiss Day. There were a few other days, but that one seemed the most appropriate for a kind of an extended week where we've had an extra day and a half off in the markets. Volume has been light. If you missed my Monday show, you can always go back to the archives and take a look. We had a really great guest. It was Scott Patterson. He wrote a book called Dark Pools. He's also written a book called The Quants. Dark Pools and the Quants, the Quants are very good introduction to what I do, which is a lot of mathematical or model-based trading. Dark Pools, more about how the actual high-frequency trading is done in the markets. We did have him on Monday. I have a nice little book here. The first caller at 877-927-6648 will get a copy of that. Give your name and address to Alan, the producer, and you'll get a free copy of the book. We'll mail it out to you. But make sure you go back and check out those archives for Monday if you were headed out for vacation, didn't get a chance to listen to it. A lot about what's actually going on in the marketplace these days. Stock market is moving rather strongly today. We're off about 17 points on the S&P, about 49 on the NASDAQ, and 158 on the Dow as we speak. Going to be kind of an interesting closeout here. And we'll go through what we have. First of all, the job numbers. This is from my newsletter last night. Like Goldilocks and the Three Bears, we're looking for the numbers to come in just right in the morning. Not so weak that QE3 is in the cards, and not so strong that it's needed. Leading indicators suggest the number is about 85,000. That would be about just right for a short position. We did go short yesterday. Right about after 10 o'clock, I started giving out sell orders. We found 3 stocks we'd like to go short, and doing okay, I guess. Probably did a little bit of a pullback, but we will find out. Probably going to take a few days for this to get support is probably somewhere around 1340 on the S&P cash. There's been a lot of discussion of whether we'll hit that today. Volume is low, and we're probably, for a week like this, expecting a low volume move. Just under 1.9 billion shares for the day. Pretty much says we're going to have probably 2.9 at the end of the day, unless something really happens. They actually call the people that are watching the market right now kind of a nice, how can I say this? They call them the Acme crowd. Probably the best way to do it. But they're pretty much there to make sure that the market doesn't move too much while everybody's at the Hamptons. Come Monday, we're probably really going to see orders come in probably about 10:30 as a lot of these guys get back from their extended vacations and start deciding what they want to do in the marketplace. We did have a rather disappointing jobs number, and I think it had a lot to do with a lot of talking heads over the last few days coming in saying that we were going to get blowout numbers at about 125,000 for the job numbers. They actually would have been more like about 25,000 because of one thing. they're actually now moving a lot of people from unemployed to the disability insurance program because they've run out of money. The economy, and this is, I think, from a news article today, the economy created just 80,000 jobs in June. The Bureau of Labor Statistics reported Friday. But that same month, 85,000 workers left the workforce entirely to enroll in the Social Security Disability Insurance Program, according to the Social Security Administration. So what do we have? A huge move of taking unemployed and putting them on disability, so the jobs number looks just a little bit better than it was. A lot of these are people that are being rotated out of the military and don't have jobs. Some of the people that have run out of unemployment. But as my dad said, figures don't lie, but liars can figure. There's a lot more going on here. We've seen a huge, now that everybody knows what to look at, we're finding a lot more people turning over the rocks and finding out exactly where we are going to find the people that are unemployed but not being counted. So keep a lookout for that. But pretty much in the newsletter, we had a good start to our shorts. Some people are calling this the zombie economy, the living dead, or not quite dead, or just sort of dead so far. And it's been just a little, how can I say, just a little weird out here. One of the nice things we have is Tiger TV, and hopefully you were watching on it, maybe seeing some of the text. I've got a nice chart here for you. This is the percent job losses in post-World War II recessions. That nice red line is pretty much where we're at. You can see that we are really, really lagging in recovery in jobs. And as we continue to go through, we are in our 54th month here of pullback, and still, although the trajectory is up slightly, like I said, I suspect that somewhat of this is getting the books cooked to try to get us as close to 8% or under by election time. I don't know if with what we have going on right now, especially the huge moves in Europe, that we're going to get that kind of move out there. Anyway, Basil's talking about the first picture I showed, which is the VJ Day picture in Times Square of the sailor kissing the nurse. But that's pretty much what, on National Kissing Day. Seagate and Western Digital, a little bit wounded out here. Let's see if I can get a current quote on STX. Basically, they're going to have, and I think I brought this up in about March, they're going to have a hard time going up against previous earnings. When hard drives were in short supply, they had actually, some of the drives had doubled and tripled in price and gone from their standard 8% margins on drives to actually getting somewhere in the neighborhood of 18 to 19 on some of these drives. So they had a short time where their margins exploded because of the shortage, but now they're right back to regular, pretty much pre-disaster drive margins. And they pre-announced last night, off not as bad as you would think, about in line with the market. They were off maybe about $2 last night, but continues to. They're probably going to. A lot of people are thinking this is the calm before the storm. Looking at what's going to happen this fall with Windows 8 coming out, pretty quiet part of the marketplace right now, as everybody's thinking that as Windows 8 rolls out, it's going to cause a lot of pin action. Part of that is going to be STX and Western Digital continuing to roll as they go on. But and we're still pretty much at that 1350 level on the S&P, down 17. My model basically was predicting that we could have a possible 10 points up and a 30 points down today. We got about half that. I was looking for 85,000 on the jobs number. It came in at 80, which is a little bit more on the side, leaning to a possibility of QE3. And that's going to continue to be, I don't know what the end of the day is going to come in. We do have very light volume, but I suspect when we come back on Monday, that actual selling pressure is going to intensify. Apple did pop this week. I know there's a lot of people following Apple, APEL. And part of the reason it popped, people are saying, is because of a new iPad, a smaller one to compete with the Google version of their tablet coming out. But a little bit less well known is Apple has finally settled its trademark case in China for about $60 million. I covered this a little earlier in the springtime, and that is that they went up with a company and basically did a end round and said that they were yet another company and wanted to buy the rights to the iPad name in China. But basically didn't tell them that they were Apple and what product they had, and in fact, in some points, lied to them. I think that originally they got the rights to the iPad name for $1 million. As soon as the Chinese company found out that it was really Apple and not this third-party sham company that they opened up, that was it. Now, $60 million, probably $60 million they didn't want to spend, but at the same time, it's kept them out of that market and probably cost them 3 or 4 times that much. Now that it's been solved, I suspect that the big move that Apple really had wasn't so much on this new 7 or 8 inch iPad, but more of an issue with them being able to start selling into the largest market pretty much in the world right now for them to sell new products like the iPad. So I think that they're going to be rolling out the door here now in about 10 days in China. So, we'll see how well it goes. But Apple, certainly not one you want to be selling or shorting too much in the marketplaces these days. Probably the only interesting thing that's come out of the Hamptons this weekend was that, Mr. Corzine doesn't have many friends. Apparently he's non grata now with the people he used to hobnob with, and some of the paparazzi have caught him out wandering around drinking coffee, pretty much friendless. So I kind of always reminded me of Weekend at Bernie's, but it's not Bernie Corzine, it's John Corzine. But looking a little sad there, a little thin, a little gaunt, but still haven't seen any more action on him, and where that extra other $800 million is that is still missing from MF Global. We'll be back in just a minute.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pezzavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Stock market corrections are the number one reason that a buy and hold investment strategy produces the poorest results, and I have 73 years of data that proves it. Now, the good thing about economic difficult times is that the worst economy can produce the best rewards in the shortest period of time. In fact, during the last 130 years, 61% of that time period has been spent in recession. And if you're one of the 70% of American households relying on their 401ks and IRAs for retirement, you need the single strategy that is bulletproof against the turmoil of our stock markets. Go to the homepage at TFNN.com. Under Breaking News, click on Success is a Numbers Game to receive this must-have free report. This bulletproof strategy may be days away from giving the next signal. Don't neglect your retirement, and don't neglect this signal. If you're even a little bit interested in accumulating wealth, providing a better life for you and your family, then go to TFNN.com to order your free copy of Success is a Numbers Game today. Implement the disciplines contained in this report, and success will be yours for the taking.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back to the first caller, who I actually gave the book and the address to the executive assistant. She's going to be sending it out to you, so look for that the middle of next week. But we do have a winner. I had lots of callers. Thanks for all calling in. We're going to start doing a few different things here at TFNN. And on Monday, the first thing that's going to happen, we're going to have a little difference in the lineup. I'm going to be starting my show at 2 o'clock instead of 3 o'clock. At 3 o'clock, 5 days a week now, we're going to have Ken Shreves. I'm going to be on Monday, Wednesday, and Friday, and somewhere around the end of the month, I'll be going to 5 days at 2 o'clock also. So we'll be having a lot more technology talk. We're going to have more targeted shows on theme shows and guests when I get here and do it 5 days a week. Pretty quiet on technology this week other than the big news in Apple and some of the other minor news. Probably the biggest news in technology and science has been the announcement of kind of finding the Higgs boson. It is extremely important, probably the biggest discovery in physics in probably since the atomic weapon, so probably 50, 60 years. Why the math showed that the Higgs boson was actually there. The actual only test to actually prove it cost about $9 billion and to find it out. Why is it important? And what is a Higgs boson? It is a remnant of a wave that gives mass to matter. And, it's probably very tough to figure out if you don't spend a lot of time around physics. The easy answer is that with this knowledge, they will be able to work harder on making electrical connections and electrical wires that have a whole lot less resistance and making electronics a whole lot smaller. A lot of the problems that they're running into in making chips, especially integrated chips, smaller and smaller, are some of the physics that this will apply to. So not only electrical lines, but even small and smaller electronics are going to depend on figuring out a lot of the intricacies of, basically you've got your electrons, you've got your, you've got your quarks and your protons and your neutrons. But a lot of these particles, which I think there's 12 known particles, maybe there's less, 10 or 12, something like that. A lot of them have very special characteristics. And by figuring out what was in this, probably the most interesting thing is this is extremely, extremely rare. The machine they have over there is 17 miles in diameter. They have to get these particles almost to the speed of light. There's actually 3 different rings. One's 17 miles, one's like 8 miles, and one's like 3 miles in diameter. They get it up as fast as they can in the one at 17 miles. Then they split that off into the 7 or 8 mile one, and then the 3 mile one. And when it's almost at the speed of light, they ram them into each other, and as they bust apart, they're able to see something. Now, they're doing this because the little Higgs boson rarely shows its face. They're doing this 24/7, about 40 million times a day, and there's a very, very tiny statistical significance in a part in a graph where it'll pop up, and basically, by doing it for about 6 or 9 months, they were able to show time after time that there was just a little blip where it was supposed to actually be shown mathematically, so that they know something's there. They really can't see this little Higgs boson yet. They're working on the second part of this, which is going to be a way to actually look at it. But probably one of the biggest things in physics, and probably since the Manhattan project, and actually figuring out what's known as the weak nuclear field. Let's see what else. That's pretty much what we have in the news. You can give me a call at 877-927-6648, and we'll discuss your particular stock as we continue to watch a low volume move in the market. 351.65. Still think we're probably going to be seeing something like 1340 on Monday as a continuation of this move. I don't know what we're going to have for the end of the day. Volume is light. When we do get back, there's probably not a lot to hang your hat on other than everybody screaming that we want QE3. And next meeting isn't until first week of August?
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
As we're going to get back, we'll look a little. Got a couple of questions. One, they thought maybe we wouldn't rally into the close, and I don't know if 3 points is really considered a rally. Just know that, this is 13, 15 points back on the S&P, that on weeks like this, what's known as the acne crowd is there to keep the market from moving too much. And they'll be buying whatever they need. The volume is extremely low. Volume will come back on Monday. You got to think that there's very little to make you think that this is a market that wants to move higher. I really suspect we've got to get back and test the 1295 level on the S&P one more time. We've been up here, which is something you don't like, up to the highs on very light volume. A lot of the stocks have been making fairly nice little indications, but we've had a lot of little dojis out here in some of these stocks. I'm a little bit longer trader than trading for a few hours. I like to trade, somewhere between 5 to 21 days in a swing trade. So I don't spend that much time if a stock goes, 50 cents or a buck higher. But, I think when we get back Monday, probably going to have a little bounce in the morning. And then I think as soon as they get the market up a little bit, probably going to start seeing some selling right into it. Like I said, we don't have, I think, an FOMC meeting until the first week of August. So I don't expect any QE3 even discussion or jawboning. And 2, we are in the heart of the election cycle. The Fed doesn't like to get involved in this. In fact, many times in the past they said that, look, within 6 months of the election, we're not going to do a thing. Unless something really happens bad in Europe, don't look for them to, except at the margins. We have seen China and Europe pretty much in coordinated action. I suspect we might have a little action out here, but I don't think it's going to matter a whole lot. So we are going to be looking at some stocks here. Let's see if I can get this thing running. For some reason, we are not getting a... what do we got going on here? Cancel. Okay. There we go, finally. Okay, what do we got? Yesterday should have been the 5th. There we go. We're going to start looking at a few stocks out here in the market and see how they've done. We're getting some fairly decent sell signals on some stocks. The first one I want to talk about today is RPM International. Kind of challenging previous high. I think we're not probably going to... Maybe won't. Let's take a look at it here. RPM International, symbol is RPM. The August 5th high, $27.70, 2.3 million shares. We went above that yesterday to $28.19 on 1.1 million shares. We are closing back in that range. 25.65. Got a good chance of this thing closing below that previous high, which would be a valid sell signal. And this thing's probably more in a trading range, about a $3 trading range. We've got a lot of stocks kind of doing the same thing. Another one that is pretty much confirming today is Live Person, LPSN. Another one that's popped up here above its previous high. The June 16th high is $19.25. 550,000 shares that day. Had a big gap down on fairly decent volume. We jumped that back over, going back up. But the last 2 days, 218,000, 175,000. And then a pull back into that gap today. Again, not a whole lot of volume just yet, but my guess is we're going to probably start seeing that a lot of these previous lows, and they're not huge lows. They're not anything that really, that people are going to see blood in the streets. But I think we need to go back and test a lot of these lows back. In the case of Live Person, it's the June 21st low out here that remains untested. You had some nice candles and some decent volume back into those. You can really see the volume as it lightened up over the last 7-10 trading days, going back up to this high. Pretty good indication of the trading range in these stocks. Let's see what else. Jarden Corporation, another one I've been kind of waiting for. Probably be a good indication on Monday. Going to get a little doji for us here today. This one went over its previous high on lighter volume. Jarden, D-H-A, not Darden, but Jarden with a J. $43.23 on April 26, 1.8 million shares. Went through with half of that. Nice size candle, and the volume did increase a little bit more as it went through that previous high, but still on the lighter side, and a nice little doji out here for us today. Let's see. Someone wanted us to look at Qualcomm. Look at it today. Qualcomm looks like it's setting up to go back and test its low that hasn't been tested out here. Last low was on June 26th. Is at $53.41 on 18 million shares. Pretty light volume as we go back into this gap up of was that about $1.25? Had a nice little gap up on the 29th out here. And we continue seeing this thing probably going to fill that gap certainly going to get back, I think, back to that June 26th low as the market pulls back into next week. So we'll continue watching the market out here, but it's kind of light volume. Going to, not much of a bounce. Certainly off that low, you would have liked to seen some kind of energy into it as it comes back. Maybe lighter energy on the way back. We've got Garrow from Orange County, and he's calling on CMI, which I think we told him to cover his short last time. Maybe he's talking about shorting again. How are you doing today, Garrow?
How are you, sir?
Good.
Thank you for taking my call. Absolutely, I covered the short, and I want to go long now. I'm not sure where to get in. I need an entry point, sir. I haven't done nothing yet, though.
Okay, you've got kind of a nice low. A lot of times when you're in these trading ranges, the end of the trading ranges stops when you have about 50% of the first high volume low. I suspect that you probably want to go low if you could get like a 1.5 million share low somewhere around $89. I'm keying off the first big low here of June 4th. That had 3.7 million shares at $89.44. Came back in. You had your first nice. I think this is when you called, and I said, you got some pretty good support right underneath that.
Yes.
And I think that's when we recommended that you went ahead and covered your short on it.
Yes.
Now, you've had a decent pop. You had a decent sign of volume, and you want as much as you can for this thing to fill it. If I'm wrong that the market's not going back to $12.95, you want to be buying somewhere around $92.50.
Yes.
But I suspect that what I like to see most of all in some of these moves out here is a test of the original high volume low on 50% of the volume. You had a nice, 3.7 to 2.1. You're almost there. So, you've gotten a pretty good indication. You may not get it. I suspect that if the market gets a little gravelly here over the next couple of weeks, it wants QE3 so bad it could scream. I think if we go another week and the Fed doesn't say anything about it, we're going to continue to kind of melt back into the Fed. Yeah, I mean, this is a great setup. What I would have against this is the market pulling back.
Yes.
And, if we do nothing, if we don't look like we're going to go back and take $12.95, then as close to $92 as you can get. But personally, I'd be wanting to see if I could get one more retest right around $90. And I think there's a high probability that you're going to get that. Probably going to also see the market down about $12.95 on the S&P when it does.
Okay. How about if I buy, let's say, 200 shares at 92 and see what will happen? If it goes to 90 or 89, another 200, or it's wrong?
I'm not a big fan of buying at multiple levels. I want to buy at the right level,
Yes.
and I need to know I've got an edge that's better or worse. Yes. And right now, I would say that the best risk reward is at $90, and
yes.
I really can't. It'd be tough for me to say. Buy 200 at 92. Either the right thing's going to be to put all your chips in at 92, or to wait for 90. And you're going to know. I mean, you've got you got pretty light volume today and a nice little hammer. I suspect we're going to see some selling as a residual of today's action, kind of come in on Monday. Probably going to bounce it. I bet they're bounce at about 5 points on Monday morning. We see it kind of continue to move down. The next real support level is about 1340 on the S&P. If we see that on Monday or Tuesday, we get some kind of sign that the market's going to reject that, then my call for $12.95 is probably wrong, and you'd want to go long. If you bust 1340, then you're right back down to $12.95 in a heartbeat.
Absolutely.
Okay?
Excellent. Thank you, sir. Thanks so much. Bye-bye.
We've got a request in the den for Apple, taking a look at it. I've been talking about it bouncing back over about that 585 level, which had been kind of resistance on that. One thing I dislike about this whole Apple chart here, like I said, I'm not a big fan of going short here, but it's getting awful close to the previous highs in that 618 to 629 level on about half the volume. You had 34 million shares at one peak. At 620, you had 32 million shares at 618. You were $4 short, and this is one that you've got to know that you really want it to go above that probably 629. You want that volume to remain low, and about 17, 18 million shares, and it's got to close back below before I'd ever think about shorting this at all. I certainly couldn't go long here. Like I said, the volume has not been anything to write home about. We've got a doji today. I could see where a lot of people would think about possibly going short here, but I think that there are 100 stocks better to short than this one, right off the top of my head. And I think that if you were going to short any stock and wait for it and get a decent signal, this would be the one to go over. You're probably going to need, is that 620? Yeah, it's not 628. 620 on April 18th. You need it to go above those levels. You need it to go on extremely lighter volume, and you need to close below it before pulling the trigger on it. This thing I thought was probably in a fairly decent trading range from about 530 to 585, unless it broke out to the top. You'd probably look at this thing pulling right back to that 85 level to test where it actually broke out, where the trend line has been for, about 2 weeks. 581, you had 588, 589. Probably going to get back to about 585, I would imagine. And the volume at that level is going to tell you whether that support level is going to hold it, or you're going to go right back down to that, what I think is the bigger, wider trading range of about 535, 533, somewhere in that neighborhood. I think there's a lot of good things happening with Apple. To me, you're one headline away from them saying that they sold 1 million iPads the first day in China, and why the volume's light and everything in the chart tells me to go short. The headline risk makes me think that there are 100 better stocks to be short out here. But I don't know, earnings before 724 certainly could have it, but it's kind of hard to see, how a lot of that's going to play out in the marketplace. Equinix, EQIX is another one here. Been bouncing around these highs, but kind of an interesting stock. Let me get a profile on it just to remind myself what this company does. Data service to protect and connect the information assets for enterprises, financial service company, and content and network providers, primarily in Americas, Europe, and Middle East. So, let's see let me see if I get this closed. A few housekeeping things on my computer here real quick. Oh, we're going to come back. Anyway, Equinox, we'll be right back. We'll take a look at this. Reminding you that come Monday, I'll be in here at 2 o'clock. Monday, Wednesdays, and Fridays, 3 o'clock. Ken Shreve takes my old spot. And we'll be looking at it. So, new time starting next week.
Has the current market volatility continued to stop you out of trades when temporary market spikes move against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. One of the
the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the advantage of keeping your trades open even when the market temporarily spikes against you. Nadex's innovation has allowed them to come up with a line of unique short-term binary options that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you gain access to each host charts and computer screen as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, Dave White, Larry Pesavento, or Victor Jones, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV yet, then visit TFNN.com today to see what you're missing. Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Just like that, another month has passed and the Great Panther Silver Summer Silver Giveaway has come to an end. Each market day in June, one lucky winner was chosen to receive a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. We'd like to thank all the listeners that chose to participate, and if you weren't lucky enough to be a winner this time around, be on the lookout in the coming months for another opportunity to win a 1-ounce silver bar courtesy of Great Panther Silver and TFNN. Thanks so much and good trading.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
As we come back, we're going to look at stock, Equinix. I guess is what it EQIX. Another one, kind of a big stock, $170. April 26 high, $172.44, 5.3 million shares. It's tried a couple times to get over that huge pop-up. A little doji out here on June 18th, 1.5 million shares. Above it, of course, right back below it the next day. We've got one more signal out here. July 3rd, of course, 610,000 shares. That's a half day. So even if you double it, we're still 1.2 million shares, which is less than the previous high. We've got to close back into that trading range. Kind of as the market as a whole, that's kind of what we're doing, bouncing with less volume each time at these higher highs. We'll probably know a lot more coming Monday. Had one question in the den. Who are these people that buy at the end of the day or push the market back up? talked about a little bit on Monday, and that is that the professionals on Wall Street leave for the Hamptons for the 4th of July week or weekend, and they leave probably one or two really good traders, and the rest are called the Acme crowd. These are the youngest traders. Maybe they've only been out of college 1, 2, 3 years. Their job is to do one thing, and that is stop any momentum or blunt it until the pros come back. Their job is to make sure that the market goes as much as they can nowhere. On a day like this, where I think on a normal week, we would have been down 30 points by today. And I think we've got that extra 15 points coming either early Monday or late Monday, Tuesday morning, as a lot of the people get back from vacation and start looking at those job numbers, start looking at those numbers of how many people are going on disability, and knowing that suddenly a bunch of people weren't hit by a train and went on disability. We know that those numbers are fudged a little bit. Looks to me like they're going whole hog and doubling down on those unemployment numbers. So we're going to have to continue looking at that. But just know that the purpose of this week for traders on Wall Street is to try to keep this as low volatility week as they can. I did a study for a magazine, it had to be 2007, and they wanted to know what the volatility was during the week of the week during the 4th of July, and it over any other week besides, I think, the week before Christmas and the last week of August, both showed the same thing, and that is about half the standard volatility of any other weeks during the month. So you have a couple of weeks where your trading range is historically is going to be about half of what it is the rest of the year. That's why the week before Christmas, the one in August, I think, has started to go away. I think that was a lot of schools used to start in the 1st of September, have now moved almost into the middle of August. So I think that the low volatility week, if I looked at the data again, I probably need to. I bet it's shifting more and more to the last week of vacation, for summer vacation for kids, and a lot of those same traders on Wall Street kicking out for the last week of vacation with their kids. Anyway, you have a great day and a safe day. Hang on for 2 more wonderful hours of programming on TFNN. Remind yourself that I start at 2 o'clock Eastern Time on Monday, Wednesday, and Friday. By the end of the month, I'll be going to 5 days a week. And we also have Ken Shreves coming in there with 5 days a week also. You all have a great evening.